When and how China responds, I think, is key to what happens next. The markets were up on Friday, and the reason is, I think that there's a real sense that a deal is yet to be done. So you might have expected the markets to sell off big time. In the end, it did not happen. The Dow, which had been down 358 points at its worst, closed up 114, or 0.4%. The Nasdaq was up a handful of points, S&P 500 ahead by 0.4%. This was the worst week for the New York markets in 2019. However, they're all of them still within a handful of percentage points of their all-time highs. Go figure. The other big story of the day was the initial public offering of Uber, the biggest we've had in America since Facebook came to market in 2012. A dilemma for investors because Uber is revolutionizing the transport industry, but it also loses billions of dollars. There's no profit in sight. Its drivers are unhappy about working in the gig economy, and that's rather upset investors. So it came to market at $45. It immediately sank by a couple of bucks and closed at $41.57. So a disappointing day for Uber. Good for them in the sense that they have $41.50 that they didn't have per share to spend on development, but nonetheless, I think we'd be looking for a bit more than what actually happened. Investors waiting to see over the course of the next 6 months what happens to Uber and its rival Lyft, whose shares are down about 30% in the last month since they came to market, before deciding whether they jump in or not. Terrett, CGTN, on the floor of the New York Stock Exchange.